Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. So we're going to start the new year off, and for the month of January, we're going to be talking about cleaning up, setting up, and getting all of your job costing foundations in place. So this week's topic is going to be why cleaning up your last year's books matters for your construction business, because we want you to start the new year off in good shape. And that means making sure that last year's is cleaned up and ready to roll you into this year. So what do we want to talk about this week? So what if I told you that, you're going to start off the new year, but you know what? Your books are messy, but you could have missed thousands in profits. Maybe you made some bad estimates last year because your books are a mess. And oh, surprise, you're going to have a really big tax bill because your books are a mess, right? So we just want to break down why it is so important for you to not only clean up last year's books, but make January what it really needs to be as a good solid stepping stone for the next year for you. All right. So this is the one thing that I think that you really need to focus on. A lot of our clients start off the year January. January tends to be a little bit of a slower month coming out of the end of the year into the new year. So now is the time to really dial in the financial things that in many cases you don't always get a chance to work on during the year. So January is a great time to do that. So do me a favor if you can, if you could just drop into the chat if you're ready to, clean up your books, because this year really can be smoother for you and really help you be more profitable. Okay. So why does this matter, right? So clean books aren't just for taxes, right? I think a lot of times it's the two of them get correlated together, but your books are really just a foundation of your entire entity. It's the foundation for accurate job costing. It's the foundation for being profitable in your pricing. It really is what the rest of your business needs to be built on. It's not just, oh, I need a profit and loss statement to put on a tax return. It really speaks to what's going on in the rest of your business, right? So we want to help you build that solid foundation. If your numbers from last year are wrong, then everything that you set up this year, any of your budgets, any of your estimates, any cash flow plans that you may have, they're going to be off, because what you're doing is you're taking that mess basically and you're using it, that historical mess, and you're using it to build all of your estimates and your projections and things off of. So we've all heard the term garbage in, garbage out. It's the same thing. If your books are a mess from the prior year and you're using that as your foundational tool to build the foundation, the financial information you want for this year, you're starting really off like on not only on the wrong foot, is you're probably not even in the right room to start off with. So what do messy books truly mean? That you might be overstating profit on jobs that actually isn't real, right? We don't want to see you do that. We want you to be profitable, but we want it to be real profitable. Or it could be even worse. You're hiding losses, really large losses in projects, right? Because your books are a mess. You may have figures that you've used for your labor, you're estimating your margin off of, but those are all distorted. Those aren't based on anything accurate. Why? Because your books are a mess. And your bidding, the bidding that you do for the jobs coming up is just as important as the jobs that you're working on and the jobs that have closed. You don't want to underestimate that next bid that you're putting out, or the next 5 bids you're putting out, right? That you're trying to get in place for the rest of the year to build, your year out. You want to make sure that the information you use to build that is accurate. And if your books from the prior year are messy, that's going to be one of those things that's going to totally throw off any of your future bids. So you want to make sure you're using the most accurate information. Clean books truly ultimately will equal clarity in your business, financial clarity, confidence in your bids and in your projects, and just general control over what's going on in your business. With messy books, you have no control over what's going on. So now, let's start the year. Let's get your books into good shape so that you can make the best decisions about your business because you've got a good set of books. All right. So what do we want to talk about? We want to break it down into different places that you want to quote unquote clean up, right? We use the term clean up a lot and you'll hear that over and over again. But what does that mean? All right. So let's talk a little bit about that. So it's going to be bank and credit card reconciliations, right? You want to make sure that you reconcile your cash balances to what's inside of your financial statements, inside of your ledger. You want to make sure you reconcile your credit cards to your ledger, right? Because if you have unreconciled accounts, you might have costs in there that actually aren't real, which will ultimately throw off your job costing, which will throw off your profitability, right? So you want to make sure when you're reconciling, you're actually including all the things that you should. You're not adding things that don't belong there, and you're not forgetting things that should be there, right? So if if you have unreconciled accounts, you're going to have inaccurate job costing and you're going to have inaccurate profitability on those projects. What else do you want to work on when we're talking about cleaning up your books? Accounts receivable and payable. Who still owes you from last year? Who do you still owe money to? Do you have subs that you owe money to, vendors for materials, etc., right? These are the things that you want to make sure that you dial in and you're clear on at year end, because those will ultimately affect your cash flow in Q1. If you think you have receivables out there that actually aren't real, that were already paid, and you're expecting them to show up in January and February, it's going to throw off your cash flow for Q1. And it's going to be the same thing. You don't have payables on your list, and suddenly subs come back or the materials vendors come back and they say, gee, you owe us money. Again, that will ultimately affect your Q1 cash flow. So you want to make sure that you dial in and you know who owes you money at year end and who you owe money to at year end. Next thing, you want to look at your job costing and you want to review your job costing numbers. So you want to make sure that you've got all of the jobs that you've worked during the year, right? And the expenses are assigned to the correct jobs. Again, that'll throw things off completely, right? A job looks profitable because other, expenses related to that ended up in another project. And maybe now that project looks inaccurate, right? So you just want to make sure your expenses are in the correct projects. You want to make sure you truly close out finished jobs, looking at the profitability on those finished jobs. Have we billed everything? Have we paid everything associated with it, right? Have we accounted for everything? Do you have any miscodings? Fix the miscodings, right? Do you have materials in the wrong place? Do you have subs in the wrong place? Again, if you have materials and subs that have accidentally ended up in your operational costs, that's going to throw off the margin numbers and the figures that you're using in order to create that next set of bids for that you're moving and taking into the next year. So again, you want to fix all of those miscodings because you don't want to use that inaccurate historical information as a basis for the next batch of things that you are going to do, new projects, cash flow, etc. So what else do you want to kind of clean up? We want to clean up our subcontractor records, right? Do we have accurate W-9s for all of our subs? Have we collected them? Are we putting them in the correct categories? Do we have a clean vendor list? Do we have vendors still in our vendor list from 5 or 6 years ago, vendors you're not using anymore? So getting that W-9 at the beginning of the year, actually, you really should have gotten in the prior year. But again, let's go back through that list and get all the W-9s. The W-9s, number one, you're going to need again at some point in order to do 1099. So you're going to need that accurate information, their EINs, addresses, proper business name. The other thing is many of you are subject to workers' comp audits, and you have to supply the insurance company with your W-9s along with a certificate of insurance for your subs. So again, this isn't just to do 1099s. It's going to affect you in other ways. So it's a great time for you to get ahead of it. Make sure you clean up your sub records. Make sure you've got a good solid list of who you're using now and having W-9s for the subcontractors that you're using today. And then the last is you're just going to prepare all of that year-end reporting, right? So you've gone in there and you've quote unquote cleaned up your financials. So now when you are handing over that set of financials to your accountant or your EA or your tax preparer to do that tax return, now they have an accurate set of financial information. They don't have to go back and tie out all kinds of numbers or make adjustments or do all kinds of additional work to your financials before they can even throw it into a tax return. You've given them an accurate set of books. Now they can now worry about getting you an accurate tax return and filed in a timely fashion. So what are going to be some of those actionable tips that we have from today and some of your takeaways, right? So what are the things that you are going to want to do, right? So first, Tip one, reconcile all your banking credit card accounts through December 31. Number two, run and you need to make sure you run a job profitability report, right? What's the profitability on all your projects? And flag any jobs that you feel look off, right? Because I know most of you in your gut know what jobs are and are not working, things that are off, right? You'll be able to see that in a report, but you've got to run that report. Third thing, make sure you clear any undeposited funds. Make sure anything that should be deposited has been deposited. You want to match your payments correctly. That's going to be important for two things. Number one, your receivable list being as accurate as possible and your cash being as accurate as possible. And at the end of the day, I'm using this term in a very general way, but most of you that we talk to are going to be cash basis for tax purposes. So you need to make sure that that deposit is in the correct year. All right. So that's going to be important. Tip four, all right, make sure you've got to review your receivable list and your payable list. Are they accurate? The list of receivables that you have, are they real receivables? Take anything off that list that isn't real, any weird lingering balances. When we see negatives on a receivable list, there's something wrong. What's going on with that? And the opposite, if we see debits on a payable list, there's something wrong, right? Let's get them as accurate as possible so that you know who owes you money and who you owe money to. And the last thing is you're going to pull all of this together, right? You're going to pull together that profit and loss, that balance sheet, and you're just going to review it for accuracy so that before you hand that off to your tax person, it is as accurate as possible. So when you clean up last year's numbers, you aren't just fixing the past, you really are setting yourself up in a positive place for the next batch, the next year, the next quarter, the next half of a year, the next batch of bids that you're going to put in, because those, ultimately that's going to be the difference between the profitability in your business. So don't use messy, inaccurate numbers, as a basis for the next set, next 1 year. Let's clean that up, get it in good shape, and make sure that you're using accurate information going forward. So Clean Books is going to make it for better decisions for your business. It's going to help significantly with accurate job costing, and it's just going to help you find profitability during the next year. So January really is the best time to kind of sit down and look at this information. It tends to be the easiest. Why? Most of you have slowed down a little bit in your businesses, so you have the time. Work with the financial people that you have in your business to clean up your books before you know what, April is here and suddenly now the weather's broken. It's gotten, most of you are in inclement weather throughout the winter time, so you probably aren't working as much as others. And now before you know it, April's here and you're back out on the job site. So January really is a great time for you to dial in on that because most of you will most likely have a little bit of time. And you'll have that little bit of time to take in January before, again, your year barrels off in front of you. And, now you're busy and you're back out on the job site. So, next week, what we're going to do is we're going to dig a little bit deeper into these financial statements and we're going to talk about your chart of accounts, right? We want to make sure you've got the right chart of accounts for construction because it's going to look a little different because you're going to be doing job costing than your average chart of accounts than say like a consultant or a restaurant, right? So we want to make sure that we tee you up to have the right set of chart of accounts for to classify your expenses so that it's in line with what the expectations for construction are and that you have a much easier time getting to that correct financial information so that you can make better business decisions. So we always look forward to seeing you here every week. Follow us on Facebook, Instagram, YouTube, and LinkedIn. We are at The Construction CPA on all. I look forward to seeing you here every week. Have a wonderful day, and we'll see you next week.